Hello and welcome to Mining Network's monthly silver outlook. I'm joined by Jeff Christian, the managing partner of CPM Group and a commentator on metals since the 1970s. Jeff, thank you for joining us. Let's jump straight into silver. We've had, God knows how long over the last, I'd say 2 years, commentators in the industry calling for $50 per ounce silver. That's being conservative to say the least. There's been many others that have been calling for much higher silver prices. What's your take on all of this?
Well, silver has touched $50 twice, once in 1980 for a few minutes and once in 2011 for a few minutes. I guess that sort of fixates people on $50. Our expectation is the silver price is facing some headwinds right now. We expect it to rise modestly over the next 5 or 6 quarters. At some point, we think that the economic environment will lead to stronger investment demand, and that might not occur until 2023, 2024, 2025. But when it does, we think that the silver price does actually go up to $50 and over $50. We're expecting a more powerful increase in silver prices than we've seen in the past 2 times. The silver market right now has plenty of metal around, but that can disappear very quickly when investors decide they want to add to their inventories more forcefully.
Yeah, moving on to actually investment demand. Obviously, you've just recently produced a 265-page, very comprehensive silver report, which I'd highly recommend to anyone investing or working into the space. Would you be able to give us a bit of an overview of the insights and I guess the general consensus that you found in terms of investment demand over the past year and also the supply side to this market?
I mean, investment demand really is the single most important fundamental in the market. You have fabrication, you have total supply, you have mine production and secondary recovery. The Indian supplies are enormous because there are billions of ounces in jewelry and statues and such there. And then you have fabrication demand, which ranges from jewelry and silverware to photography and electronics and solar panels, which is an up and coming none. But if you look at the market econometrically, it's really investment demand that drives the price higher and lower. And we were concerned a few years ago because we'd seen investment demand rise very sharply 2005, 2013. Get up to 200 million ounces in a given year of physical silver. And that came off very sharply 2017, 2018, 2019 in a way that was reminiscent of the late 80s. And we were saying, look, investors are backing away from silver. They came back in spades last year. So silver investment demand more than doubled. It was about 100 million ounces in 2020. And obviously, the reasons why investors are stacking gold and silver, pretty obvious. A lot of economic concerns. You had the pandemic, you had the lockdown. And so you saw investment demand rise and the silver price rose consequently. This year, we're seeing some weakness in the silver market. We had a very strong surge in the first quarter, but over the last, really the period, say, April, May, June into July and now August, we've seen some disenchantment on the part of investors, people who thought the price was going to $50 or they were buying the stuff that was saying it's going to $100 or $200 or $300, and it hasn't. And they were listening to people who were talking about the stock market crashing and the dollar crashing and the economy crashing and interest rates skyrocketing, and interest rates haven't skyrocketed and none of that other stuff has fallen. The stock market's moved to new record highs and silver hasn't. So you've got a lot of disenchanted investors right now. And that's actually been weighing the price down. And as we're speaking on the 20th of August, the silver price is actually now testing a break below $23 an ounce. And I think that that's really the key factor. Our expectation is that it's a relatively short-term trend. We have seen it going on for about 5 or 6 months now. At some point, we think that investors will reverse course. They'll become more concerned about the economy and they'll start buying more silver again.
You mentioned something there about obviously people expecting interest rates to increase. that's been a very big talking point on many of the main channels covering the space. What are your views in the near term of an increase in interest rates?
We're trying to figure out how to succinctly say it this morning. We do think that interest rates will rise modestly going forward. And we don't see interest rates rising to a point where they're negative for gold and silver. Typically, you need real interest rates over 3%. And, if you look at the Fed dot plot, the consensus is that in the long run, the Fed funds rate only goes to 2.5%. There are a couple FOMC members who think it might get to 3%. But, if you got 3% Fed funds rate and you have 2% or 4% inflation, you've got negative real rates. So we don't think that real rates will be a negative for investment. That said, next week, we think that investment market concerns about real rates rising could it push the silver price down $1 and could push gold down $10 or $20 at least. Next week, as we move toward the Kansas City Fed's Jackson Hole thing, I think there's going to be a lot of talk about Fed tapering, monetary accommodation being tapered off, the potential for interest rates to rise in the long run. And people see the world in black and white as opposed to shades of gray. And, so they hear interest rates are going to rise and they panic. So, I think that market concerns about interest rates could hit the gold silver market, but we don't think that interest rates themselves are going to be particularly negative for the foreseeable future for silver.
One of the things that continue to be discussed, especially back in March when there was this attempted squeeze on silver, was manipulation of silver. Have you ever seen any evidence of manipulation in silver, either artificially or by any other means? Do you think there is anything going on in the market?
Well, people will spoof the market. People will come in and jerk the market around. There was a trader in 1994, 1995, for example, who played with the fact that a lot of people didn't realize that the COMEX options were options for the next month's futures delivery, as opposed to physical metal on that day. And he exercised options that were slightly out of the market based on the supposition that people would have to scrounge to get metal and the price would be above his strike price. And he was right. And he made some money and then he lost his job. So there's spoofing in all markets and that continues. And you'll see people who will, screw their clients. Yeah, that's a comment. I mean, part of CPM Group's raison d'etre is we help mining companies, smelters, refiners, producers, investors get a better deal. So you see that kind of stuff. You don't see any evidence of any grand conspiracy to suppress the price. And you see an enormous amount of evidence that there is no such grand conspiracy. We have a chart that we did in 2013 when a lot of people were talking about this stuff. And we showed that the outsized moves in, I think we were looking at gold at the time, those 5-10 minute periods where you see an enormous flow. Actually, we looked at 7 periods in October of 2013. 4 of them were actually periods where people were buying and the price was rising. 3 of them were periods where people were selling and the price was falling. So it wasn't an action to suppress the price. It was an action to take advantage of technical buy and sell points. And then you looked into the data and you saw it wasn't a single actor. It was hundreds of actors. If you go back to April of 2013 in the gold market, when the gold price fell sharply, there were more than 1,000 participants, many of them technically driven, and they had computers that were saying if the gold price falls below, 1580, sell. And everybody was looking at the same price. Everybody was using the same program. The price fell below 1580 and they sold. And the price fell sharply. And it wasn't a grand actor. There are people who want to believe that there's some grand actor, but the reality is that this market consists of thousands of independent entities buying and selling, often using the same price charts.
Yep, no, that makes sense. On the other side, something I did really want to touch base with you was when you are looking at the fundamentals of silver. Obviously, we talk a lot about interest rates and some of the other things like inflation that do have a general impact on precious metals. Silver has a bit of a a different swing to it in terms of 50% of it is used for industrial purposes. How much of the actual fundamental supply and demand consequences of those industrial purposes do you use in your forecasting?
I wrote a speech for the Society of Mining Engineers, Metals and Economics and Minerals Society back in the 90s. And the gist of that, well, the title was "The Fundamentals Still Apply." And the gist of it was, one of the fundamentals you have to pay attention to is investment demand. Now, you don't include it in your supply-demand balance because you want to know what the balance is between total supply, mine production and scrap, and fabrication demand. Because fabrication demand has different economics, different ways that they react to price changes. And they use the stuff. They don't necessarily consume it, but they use it, whereas investors have different economics, different objectives, and they don't convert silver into non-fungible forms. So that silver that investors buy is readily available. But investment demand is the key fundamental. If you understand that and you use investment demand in your fundamental analysis, you see the fundamentals are extremely important. All of that other stuff, interest rates, investment demand, overall inflation, economic activity, all of those macroeconomic variables, as we call them exogenous variables, they only affect the price of silver as insofar as they affect investment demand, fabrication demand, and total supply. So we spend an enormous amount of time, as you said. We have this 260 some odd page silver yearbook, and it's mostly statistics on mine production, secondary recovery, fabrication demand, and investment demand, and then market inventories and trading volumes on the exchanges and stuff like that.
Good. And for investors, I guess new and veterans into the silver space, are there any, you mentioned the Kansas event coming up soon, but are there any other major events that you'd imagine in general for precious metals may have an impact, whether they be unscheduled? Is there anything from the Fed coming out soon, or are there any other events that people should be monitoring, maybe add to their calendar and watch out for, which could have an impact on the silver price moving forward over the next few months?
Well, we look at a wide range of topics, and the thing that's on the immediate horizon is Jackson Hole and expectations. But one of the things that we've seen over the last 2-3 weeks is increased investment demand for gold and silver, because more gold than silver, because of the Delta variant of the COVID having a more economic, bigger impact on the economy. So, when we go forward and we look at the next several months, we're going to be looking at economic factors, and we've seen some pretty strong numbers. Our expectation is that the numbers will be strong for the US economy, Chinese economy, less so for Europe, but some, for the Europe and the UK. We'll be watching the overall economy. We think that, inflation numbers in the United States, people are watching them, will remain elevated for a while, partly because of the basis. If you go fast forward to, say, the second quarter of next year, you're going to be looking at second quarter price 2022 prices versus second quarter 2021, and inflation will look rather low. If you look at the current inflation levels now, or price levels now, and you say, how's this compare to, say, 2019 or even 2018? You're looking at a 2.3% per annum increase in inflation. So we think that inflation will remain on the horizon, and a concern, a misplaced concern, helping stimulate investment demand for silver for the next 3 quarters. But that by the time you get to the second and third quarters of next year, that's different. Longer term, the US election in 2022 will probably be something of a factor. The presidential election, which really will start at the end of 2022, is definitely going to be a factor. You have enormous political problems on a national level in the United States, China, Europe, the UK, Hungary, Russia, India, Thailand. So you've got a lot of political factors on a national level. You also have a lot of international political factors, US versus China, Europe versus China, everybody versus Russia, the fallout from the fall of Afghanistan. One of the things that is going to be very important is to watch to see what Iran and Pakistan do with a newly reconstituted Afghan government. And if the US can be smart enough to stay out of the way and let Iran do the US's dirty work, really, it's Iran's dirty work too, and it's a lot more important to them because they're on their doorstep. So, there are a lot of political issues, economic issues, financial market problems, issues to be resolved. But we think a lot of those will take 2 or 3 or 4 years before they become really problematic and command the attention of gold and silver investors. On a shorter term basis, it's the COVID and it's getting vaccines out there and trying to get the economies back to normal. There will be some tapering on monetary policy. It probably will not be particularly problematic for gold and silver, but market expectations will be.
And finally, I'd like to get your views. Obviously, I know there's so many, as you've just explained, scenarios that could happen, and that obviously has an influence on the silver price. But you have called price forecasts in the past, and they've always been, to a pretty good degree, spot on. So I wouldn't mind hearing what your views are, say, over the next couple of years or 5 years or so. How are you expecting silver to perform moving forward?
So our expectation is that the price is just $23 right now. And we wouldn't be surprised to see the price spike down to 22 in the next couple of weeks. After that, we think silver dusts itself off. We're expecting the silver price to move slightly higher in the fourth quarter. We think it'll probably trade in the, say, the $22 to $28 range in 2020, the rest of this year and 2022. Longer term, we do think that the market is sort of setting itself up. If that investment demand stays around 100 million ounces a year for physical metal or moves higher, then you could see much higher prices. Our expectation is that you might see an economic recession in 2024, 2025. You might see global financial problems, crisis, not as bad as the one in 2008, but possibly a problem, and political issues, and that those could combine to cause a spasm of investment demand, not to 100 million ounces, but maybe to 150 or 200 million ounces. And then the price could rise very sharply. And we wouldn't be surprised to see, as I think I said earlier, we wouldn't be surprised to see the price move past $50, maybe up to $56 or $60. We're not in the school looking at the fundamentals and the economics of mine production, secondary recovery, fabrication demand, and investment demand. We don't see any realistic view that the price could go to $100, but we do think that the price could spike higher 3 to 5 years from now.
Perfect. Well, thank you so much for joining us, Jeff. For those of you already not aware with CPM Group's research, I definitely recommend checking out their website. I'll be putting all the details in the link below.